In today's volatile world, insurance is a basic necessity where people and businesses alike must shield against possible risk. But in Africa, it barely exists for the rural and urban poor, and in cases where products are available, they're usually unaffordable. 9 out of 10 people in Sub-Saharan Africa do not have access to health or accident insurance, while a similar number of businesses face the same challenge.
The purpose of it is to try to look at what are the trends that have informed the global insurance and reinsurance market. In addition, we are also looking at what are the likely new products, for example, the political risk product, so that we can enrich the product lines as far as Africa is concerned.
The African Reinsurance Forum, taking place in Nairobi this week, had credit and political risks insurance in Africa as the focal point.
As you know, traditional insurance does not cover political risks and the credits, because obviously because of the likely consequences of a war or civil disturbance. So you find that most of the motor policies or fire policies exclude political risks. What happened here after the post-election violence, most companies found out that the claims resulting from therefrom were not payable by reinsurers because they were excluded.
The forum, which is also open to international insurers and brokers, is being held just after the world's worst financial crisis in a quarter of a century, and a time when penetration levels of insurance in Africa are still far below those in developed countries.
Africa as a continent is a very small economy. We are about $1.3 trillion as an economy. If you look at the world statistics issued by the World Bank for 2008, it's only $1.3 trillion. Now, if you compare that to the US economy, which is about $14+ trillion, in other words, the whole of Africa is producing an economy of less than 10% of what is produced by US. Now, because of that smallness of the economy, you find that the uptake of insurance is also proportionately very low.
Looking at the reinsurance market in Africa, we see a situation where maybe there are about 10 players or so. So compared to the direct insurance companies, there are fewer. I would say the competition would be less stiff than with the insurance companies. We also have international players, some of them with offices here, some who don't have offices here. And I can say with the global meltdown, there's a lot of greater trust or faith in the African reinsurers because they have really not been affected by the global meltdown as such.
Nevertheless, expectations are high that the forum will open more room, which will see the growth of the insurance industry on the continent, a factor that will boost the economic potential of African states.
Going forward, we see the rates hardening, or the market being harder in terms of conditions, and that of course would mean that insurance companies are likely to make profits from the underwriting, which is their core business, because they have to balance their books. In situations where the stock market is doing well, the investment income is high, insurance companies subsidize premiums by reducing the rates, so that because they make profits from investment, and even if they make underwriting loss, they still overall make a profit.